you're hoping to buy a home, renew your mortgage, or debating if you should wait for interest rates to drop further, home buying is a major life decision and you need to be prepared. Joining us to talk mortgage tips is Peter Shishecki with Everything Financial. Good morning, Peter.
Good morning, Carrie. Nice to see you.
Good to see you. Yes, this is a topic that a lot of people have questions about. You predicted last week that rates are dropping. So explain the difference between the Bank of Canada dropping its rates and how that translates into what it means for your mortgage.
Sure. The Bank of Canada dropping its rate affects the floating rates like a home equity line of credit or a variable mortgage. But like we talked about last week, we said, hang on, because there's going to be more interest rate drops on the fixed mortgages, the 1 to 5 year fixed, which has to do with bond evaluations, et cetera. And now we got the indication a few days ago, actually at the end of last week, that is in fact happening.
Okay, so let's talk about the difference between a shorter or a longer amortization. I got to get that out. Say that tongue-tied this morning. So what's better?
No problem. Well, a lot of people think, oh, let's jack up my payments. Let's get my payments higher. Let's shorten my amortization. But we did a study and looked at a real life person who only had 6 years left on their mortgage, changed their mortgage to 25-year amortization. That's a long time. And so they took that savings of monthly payments and put it towards an RSP. Now, granted, the caveat being they were in a very high tax bracket. What happened is at the end of the 6 years, because of the savings, et cetera, the tax refunds, their mortgage was still paid off in 6 years. So just from tax refunds, they paid their mortgage off, except the big difference, Gary, they had over $100,000 in RSPs as well, over and above. So don't be swayed by short amortization. If you can spend the extra money on and do a longer amortization, invest that money in ways that are going to be tax advantageous to you.
Yeah, I think that is sort of the thinking, is that people think if they are, putting their money down, they're saving on the interest that you would be paying on your mortgage. So that doesn't seem to be the case.
Yeah, it doesn't actually. In a lot of cases, we did some TFSA studies for some shorter or lower tax people, and then the RSP for the higher tax people. And as long as you're diligent and have a plan on what do I do with the savings, what do I do with the tax refunds, what do I do with the extra earnings, we did a bunch of them, and in every case, the shorter amortization doesn't work. And you know what also happens with shorter amortization, Carrie? You end up house poor. Your payments are so high, and a lot of times you can't change them. And as life changes, as we saw in the last many years, it does change rapidly. At least if you have the money going to an RSP, so you're still putting it somewhere, or a TFSA, if a crisis happens in your life, you can change the payment over a short period of time to help out with the day-to-day living that might be a little bit of a burden upon you, whether it's a job change or inflation, as it were, or who knows, pandemic, dare I say, any of those things. Give yourself more flexibility if your money's going to different places.
Right, and you can maybe save some money for other things in your life. So let's talk about the commissions. What are the differences in commissions?
Well, that's the part that's not disclosed for people, and that's a shame until the very end when they're doing the fine print. They're at the lawyer's or the notary's office. The longer the locked-in period of the mortgage, so you go from home equity line of credit all the way up to 1 to 5 years, the longer the period it's locked in, the higher the commission for the broker. So even as we talked about last week on this segment, you see brokers pushing 5 year. Well, 5 year doesn't help you right now with lowering interest rates if you're renewing right now. 5 year helps the broker with the higher commissions. You should ask that question first. And we talk about that with fees on investments and insurance and all those things on this episode. Ask the commissions right away. Say, what are you getting paid on this? What are you getting paid versus this? You have to look at a mortgage of what's best for you and your financial plan. A mortgage is not another product. It's a piece of a puzzle in a financial plan and your financial well-being, not just something you go by.
Yeah, it's a big one. It's important to know all of your options there. Peter Shishecki with Everything Financial. Thanks for joining us this morning, Peter. Have a great Wednesday.
Thanks, Carrie. We'll see you next week.
Okay.